Hey, what's up, everybody? Ralph here again. So today I want to talk about stocks. I want to talk about investing in stocks. If you're someone that's looking to build wealth, stocks is a great way to go. But before I get started, I'm not a financial advisor. All right. Not, so don't look to me for advice. It's just me giving my opinion, sharing with you my experience when it comes to investing in stocks. So just take it as entertainment and do with it what you will. So when I first started investing, I started investing in stocks back in 2019, July 2019. I got up with Vanguard. Before I even got into the stocks, I did a lot of research on what stocks to invest in. Because if you're trying to build wealth, for me, the three best ways to build wealth in the U.S. is you either start a business, invest in stocks, invest in real estate. Now, you don't have to do all three, but you got to do at least one of them if you're trying to invest in trying to build wealth. I have a business, investing in stocks, and now, starting to get into the real estate game. But if you're trying to build wealth, you got to invest in at least one of those. I would suggest that you invest in three as long as you do your research and, you gain a basic knowledge of it. But if you're trying to build wealth in this country, those are the three best ways to go. I'm even dabbling in a little bit of crypto. But that's not, my main, it's not a big part of my portfolio. So back to the stocks. So I started investing in stocks back in July 2019. I did a lot of research. One guy named, I went on YouTube, researched which stocks to was best to invest in. A big channel, Graham Stephan, he's a big one that I looked into. Basically overall, a lot of them were just saying invest in index funds instead of investing in individual stocks. This is a good way to just spread your risk out more instead of just, investing in one stock like Apple or Microsoft or, Amazon. So index fund is just a piece of all the companies of the top 500, S&P 500. So I started investing back in 2019, July. And, for me, it was just because since my business was going off, I had money to invest in. I wanted to let me get started in this investing game, because I want to get a piece. I want to understand how the stock market works. So I started investing in there's three index funds that I invested in. I invested in the S&P and Vanguard, the total stock Vanguard S&P. Then I invested in total in bonds, and I invested in international index funds. So I went to those three different type of index funds just to spread out the risk a little bit. So for me, the 2019 that year was a pretty good year. I made a good return on my money. It was I think I made about 20%. So I was and just seeing how it goes, if back in 2009, before this, this whole CV thing happened, the stocks were booming. All right. So, the stocks would go. So, anytime before 2020, investing in stocks was a great way to go. So I could see my investments, the money just going up, making a lot of money. And at the end of the year, I made a 20% return, from when I started. But then, obviously 2020 happened in March, and then you could see the stock market tanking. So when it tanked in March, and I think when I saw it tanking, I took out my money. So I lost about $1,600. And then when, things, started getting back, things corrected itself, you can see the market going back up. So the thing with Vanguard is once you take your money out, you got to wait a month before you can put the money back in. So I took it around, March 10th or something like that. No, March 15th. And I had to wait a whole month before I can put it back in. So I had to wait a month. I put it back in, and then you can see the stock market going back up. But I tell you, when it comes to investing in stocks, you have to, if you're planning on investing in stocks, you have to be prepared for the ups and downs, because there's days where the market goes up and then there's days where the market goes down. So if you're someone that thinks they can handle it, definitely start off with a little bit of money, invest in some stocks. I would urge people, I would recommend people to try at least, even if it's a little bit of money, to just get into stocks. It's a great way to build wealth, especially when you're thinking about retirement, when you get older. But if you're someone that cannot handle the up and downs of the stock market, don't do it because it is stressful. I've gotten to a point where I don't even look at it. I used to look at it every day, but now I kind of look at it like, once a week or, a couple times a month. But it doesn't bother anymore. If it goes up, down, it doesn't bother anymore. I look at the stock market to see what it's doing. But you have to get to a point where you can handle that stress of the market going up and down, especially with the whole CV19 thing going on. There's been times when the market has made a lot of money, and there's times when the market has lost a lot of money. So it's something that it can definitely put a stressor on your life. But for me, because I know those three ways where I talked about, real estate, starting a business, investing in stocks. Since I know those are the three ways that if you're trying to build wealth, those are the investments that you have to put time in and understanding and learning. I was like, I'm going to learn this. I'm going to dive in because I am serious about the wealth building and whatever I got to do it. I'm going to participate. So. If you're someone that's thinking about getting into stocks, I would definitely, whatever way, even if if you want to start small, and you got some money laying around, like get into it. What I would advise if you when it comes to like breaking and like managing your money, like if you have a job and you have money coming in, of course I wouldn't want you to invest money that you don't have. But if you have a steady job and you're thinking about investing, and also make sure your debt is paid. Like if you don't want to start investing in stocks if you have a lot of debt, you want to make sure you clear the debt out first. But if you're someone that doesn't have a lot of debt and you have money coming in, you're trying to figure out a way to build wealth. The best way you want to do it is you want to allocate resources. So if let's say you make like $1,000 a month, you want to make sure you allocate like 15% into investing in stocks. That's a great way to allocate your money. And then obviously you want to allocate, the rest, according to like bills or trips you want to take, vacations, however way you want to do it. But if the best way to manage your money is this, you want to allocate a certain percentage to like a certain bucket. So if you're someone that has like $1,000 coming in, some people say anywhere from like 10 to 15% of your income should go into, into stocks. So I would, or you can do a little as 5, whatever you want to start off with and build yourself up. I would do that. If you want to do 5% and then build yourself up to like 10, 15%. For me, when I was doing it, I was putting in 15%. So, that's some, a lot of people, recommend that you save like 15% and put it into stocks. So that's the thing I would do. I would manage my money that way. Whatever, say you have 3,000 coming in, just put 15% of that and put it towards investing in stock. Once you understand and you have you're comfortable and, you're comfortable in like investing money and make sure that, and you have to understand that 15% that you allocate, that you put into the stocks, you have to be okay with losing it if somehow the market just crashed. All right. So, I would like if you're someone that doesn't have a lot of debt and has their money, has a lot of money saved up, and you want to figure out how to build wealth over, long term, I would definitely look into investing in stocks. All right. So right now, like just a little update, just to give you a little update, like all that money that I lost back, during March and, April, I pretty much made it back. So I'm back in the green. So it took a while, but the market's been doing pretty good since things have been recovering. So I'm hoping 2021 is much better. But yeah, I'm definitely gonna keep on investing because it's something. It's just looking at the market and being involved in that type of process it's a great way to keep. It's a great way to shift your mindset from being a consumer to someone that's investing in companies, right? So it's for me, it's helped change my mindset of how I think about money. So yeah, if you were someone that has money saved up and you're trying to figure out what to do with your money, I would definitely tell you to like research, and research about investing in stocks. Of course, real estate and starting a business, but that's another topic for another day. And definitely like search YouTubers like Graham Stephan. He's one of the best ones out there when it comes to like finance and investing. hopefully I'll get to that point where, you know, in the future I'm doing better. I'm doing more finance videos, investing, once you know, during this whole YouTube journey. But yeah, definitely do your research and like, you know, try to get involved, because it's definitely a great way to build wealth, you know, because just having one source of income when it comes to like your job, there's not much security when it comes to that. So, I hope this helps. I hope you guys enjoyed this video. If you liked it, make sure to hit the like button, share it, and don't forget to subscribe, right? Later, have a good one.